Welcome to Investing Made Easy, your trusted source for the latest updates in the Indian stock market. Today is 1st February 2025, and we have a comprehensive analysis of the market's reaction to the Union Budget 2025-26 presented earlier today. If you find our insights valuable, please like, comment, and subscribe to stay informed. Let's dive into today's top stories. Following the presentation of the Union Budget 2025-26, the Indian stock markets exhibited a mixed response. The BSE Sensex closed marginally higher at 77,506 points, while the Nifty 50 settled at 23,482 points. Notably, sectors such as fast-moving consumer goods, FMCG, and realty outperformed, with their respective indices rising over 3%. This surge is attributed to favorable budgetary allocations and policy announcements aimed at boosting consumption and housing. The budget introduced significant personal income tax cuts, aiming to enhance disposable income for the middle class. This move is anticipated to stimulate consumer spending, benefiting sectors like consumer durables and automobiles. Companies such as Zomato and Swiggy experienced a 10% surge in their stock prices, reflecting investor optimism about increased consumer spending in the near term. Finance Minister Nirmala Sitharaman announced plans to establish daycare cancer centers in district hospitals, aiming to improve healthcare accessibility. This initiative led to a rally in hospital stocks, with companies like Krishna Diagnostics and Max Healthcare seeing significant gains. The focus on healthcare infrastructure is expected to create new opportunities for growth in the sector. Despite a modest increase in capital expenditure to 11.2 lakh rupees crore, the defense sector faced challenges due to lower-than-expected budget allocations. Stocks of major defense companies, including BEL, Bharat Dynamics, and Hull, declined by up to 9%. Investors expressed concerns over the limited boost to defense spending, which could impact the sector's growth prospects. The government announced a focused scheme for the footwear and leather sectors, aiming to promote growth and exports. Following this announcement, stocks in these industries experienced a surge. This initiative is expected to enhance the global competitiveness of Indian footwear and leather products, providing a significant boost to manufacturers and exporters. The Securities and Exchange Board of India, SEBI, has extended the ban on trading derivative contracts for specific commodities, including paddy, wheat, chickpeas, mustard seeds, soybeans, crude palm oil, and moong, until the end of March. This measure aims to curb inflation and stabilize prices in the domestic market. Traders and investors in the commodities market should adjust their strategies accordingly. Analysts predict a relief rally in the Indian stock markets for February, following a 4-month decline. Derivatives data indicates increased investor confidence, with 81% of Nifty futures rolled over into the February series. Key sectors like financial services and information technology are expected to lead this rally, driven by positive sentiment from the recent budget announcements. The government's economic survey highlights concerns that a sharp market correction could adversely affect retail investor sentiment and spending. With a significant influx of new investors post-COVID-19, many have not experienced substantial market downturns. The survey emphasizes the need for cautious optimism and prudent investment strategies among retail investors. Industry leaders have provided varied reactions to the Union Budget 2025-26. While many commend the focus on infrastructure development and tax reforms, some express concerns over constrained revenue growth and modest allocations in certain sectors. For instance, Christian D. Guzman from Moody's noted concerns about revenue growth despite the emphasis on capital expenditure. Conversely, Kamal Bali of Volvo highlighted the positive impact of personal tax savings on discretionary spending. Throughout the budget presentation, the markets experienced volatility. The Sensex briefly slipped by 300 points, and the Nifty fell below 23,500 during the session. However, certain sectors, including FMCG and realty, demonstrated resilience and closed with gains, reflecting selective investor optimism based on sector-specific announcements. And that concludes today's comprehensive analysis of the Indian stock market's response to the Union Budget 2025-26. The budget has introduced several initiatives aimed at stimulating economic growth, with varying impacts across different sectors. As always, we recommend investors stay informed and consider consulting financial advisors before making investment decisions. If you found this analysis helpful, please like, subscribe, and hit the notification bell to stay updated with our latest content. Thank you for tuning in, and we'll see you in the next update.